Greetings everyone! Welcome back to our channel Money Magnet. Today, we're delving into an eye-opening analysis by renowned economic forecaster Jim Rickards. In a recent talk, he shared insights into what he believes could be a terrifying crash that will shape the US economy. Join us as we break down each point, providing an in-depth understanding of the potential challenges that lie ahead. Point 1. The fragility of the financial system. Jim Rickards. The current financial system is more fragile than ever before. Rickards begins by highlighting the fragility of the financial system. What does he mean by this, and why does he believe it's more delicate now than ever? Let's unpack the first point. According to Jim Rickards, the global financial system is in a precarious state, with vulnerabilities that could lead to a significant downturn. He points to factors such as excessive debt levels, over-leveraged financial institutions, and interconnectedness among global markets. In a world where everything seems interconnected, a shock to one part of the system could have far-reaching consequences. Rickards often uses the analogy of a domino effect. If one domino falls, it can trigger a chain reaction, bringing down others in its path. Similarly, he suggests that the complexity and interconnected nature of the financial system make it susceptible to cascading failures. Understanding this fragility is crucial to preparing for potential economic challenges. Point 2. The risks of excessive debt. Jim Rickards. Excessive debt is a time bomb ticking away. Rickards draws attention to the ticking time bomb of excessive debt. In this point, we'll explore why he sees debt as a significant risk and how it could contribute to a potential economic crash. According to Rickards, the level of global debt has reached unprecedented heights. Whether it's government debt, corporate debt, or household debt, the sheer magnitude raises concerns about sustainability. Debt, when managed responsibly, can be a tool for growth. However, when it becomes excessive, it turns into a burden that can stifle economic activity. Imagine debt as a ticking time bomb. As long as economic conditions are stable, the bomb remains dormant. However, any disruption, such as an economic downturn or a rise in interest rates, could trigger the bomb, leading to a wave of debt defaults and financial instability. Rickards warns that this debt time bomb is a significant threat to the stability of the global economy. Point 3. The role of central banks and monetary policy. Jim Rickards. Central banks have limited tools left to address a crisis. Rickards dives into the role of central banks and their limited tools in addressing a crisis. What challenges do central banks face? And why does he believe their traditional tools might be insufficient? Let's explore the complexities of monetary policy. Central banks, including the Federal Reserve, play a crucial role in stabilizing the economy through monetary policy. However, Jim Rickards argues that years of unconventional policies, such as low interest rates and quantitative easing, have left central banks with limited ammunition to combat a severe economic downturn. Imagine central banks as firefighters equipped with a limited supply of water. In the aftermath of the 2008 financial crisis, they used their water supply to douse the flames and stabilize the economy. However, with interest rates near zero and balance sheets already expanded, their water supply is running low. If a new crisis emerges, they may find themselves ill-equipped to respond effectively. Point 4. The potential for a currency crisis. Jim Rickards. A currency crisis could be on the horizon. Rickards raises the spectre of a currency crisis, adding another layer of complexity to the economic landscape. What factors contribute to this potential crisis, and why is it a cause for concern? A currency crisis occurs when a country's currency rapidly loses value, leading to a loss of confidence in its economic stability. Rickards suggests that the combination of excessive debt, geopolitical tensions, and economic imbalances could create conditions conducive to a currency crisis. Imagine a perfect storm where factors such as high inflation, a loss of faith in the government's ability to manage the economy, and a rush to exit the national currency converge. This can trigger a downward spiral, with the currency losing value rapidly. In a globalized world, a currency crisis in one major economy can have ripple effects, impacting other currencies and markets. Point 5. The importance of diversification and preparedness. Jim Rickards. Diversification and preparedness are key strategies in uncertain times. In the face of these potential challenges, Jim Rickards emphasizes the importance of diversification and preparedness. How can individuals and investors navigate these uncertainties? And what strategies does Rickards recommend for protecting wealth? Diversification is a risk management strategy that involves spreading investments across different assets and asset classes. Jim Rickards suggests that, in times of economic uncertainty, a well-diversified portfolio can help mitigate risks and preserve wealth. This might include a mix of stocks, bonds, precious metals, and other assets. Imagine diversification as a form of financial insurance. If one part of your portfolio is impacted by a downturn, other components may provide stability or even growth. Rickards also advocates for preparedness, being proactive in anticipating and addressing potential risks. This includes staying informed, regularly reassessing your portfolio, and being ready to adjust your strategy based on changing economic conditions. And there you have it, a comprehensive exploration of Jim Rickards' analysis on the terrifying crash that could shape the US economy. From the fragility of the financial system to the risks of excessive debt, the role of central banks, the potential for a currency crisis, and the importance of diversification and preparedness, each point provides valuable insights into the complex economic landscape we may be facing. If you found this analysis intriguing, don't forget to hit the like button, subscribe, and share your thoughts in the comments below. Stay informed, stay vigilant, and until next time, take care.